Welcome to Canada Pension Authority. Did you know that most Canadians are leaving thousands of dollars on the table every single year simply because they do not understand how their retirement benefits actually work? Right now, you might be entitled to over $2,000 every single month from the government. But if you make just one wrong decision about when to start collecting, you could lose over $100,000 over the course of your retirement. Here at Canada Pension Authority, we are not trying to scare you. We are here to make absolutely sure that you get every single penny that you have worked hard to earn throughout your entire life. Today, we are breaking down the Canada Pension Plan and Old Age Security in plain and simple English so you know exactly how much money you will have coming in after you retire. If you are approaching retirement or you are already retired, you have probably heard about CPP and OAS before. But here is the real problem that we see over and over again. Most people do not truly understand how these programs work. They do not know how much they will actually receive. They do not know when the best time is to start collecting. And they certainly do not know about all the extra benefits and supplements they might qualify for. This confusion costs you real money. Money that could be paying for your groceries, your medications, your grandchildren's birthday gifts, or that vacation you have been dreaming about for years and years. At Canada Pension Authority, we have spent years helping people just like you navigate the Canadian retirement system. And we can tell you this with complete confidence: understanding your CPP and OAS is not complicated at all once someone takes the time to explain it properly. That is exactly what we are going to do today. No jargon, no confusing government language, just straightforward, honest answers to the questions that matter most to you. By the end of this video, you are going to know exactly how much income you can expect in retirement, how to maximize every single dollar available to you, and what costly mistakes you absolutely need to avoid. So let us get started right now. Let us begin with the Canada Pension Plan, or CPP as most people call it. Think of CPP as a forced savings account that you have been paying into your entire working life. Every single time you received a paycheck, you probably noticed a deduction labeled CPP coming off the top. Your employer was also contributing an equal amount on your behalf at the same time. If you were self-employed at any point, then you paid both portions yourself. Here is what makes CPP completely different from your personal savings. It is guaranteed by the government. It is adjusted for inflation every single year, and it pays you for the rest of your life no matter how long you live. That is incredibly powerful. It means whether you live to 85 or all the way to 105, that money keeps coming into your bank account every single month without fail. The amount of CPP you receive depends on two main factors: how much you earned during your working years and how long you contributed to the plan. For the year 2025, the maximum monthly CPP payment at age 65 is $1,364.60. That is the absolute maximum possible. But here is the reality that most people do not realize. The average CPP payment is around $816 per month. To get that maximum amount, you would have needed to earn at or above the year's maximum pensionable earnings for at least 39 years between age 18 and 65 and contributed the maximum amount each of those years. For most people, that simply did not happen. Maybe you took time off to raise children. Maybe you had some lower earning years early in your career. Maybe you did not work the full 39 years. All of this affects your final CPP amount. But even if you are not getting the maximum, your CPP is still reliable income you can count on every single month for the rest of your life. Now, here is one of the most important decisions you will ever make about your retirement income, and it is where so many people make very expensive mistakes. You can start receiving your CPP as early as age 60, or you can delay it until as late as age 70. The standard age is 65. For every single month you take CPP before age 65, your payment is permanently reduced by 0.6%. If you start at age 60, which is 5 full years early, your payment is reduced by 36% for the rest of your life. If your CPP at age 65 would have been $1,000 per month, but you start collecting at age 60, you will only receive $640. That is a difference of $360 every single month, forever. Choosing the wrong age to start your Canada pension plan could cost you over $30,000 across your lifetime. Now here is the flip side of that coin. For every month you delay CPP after age 65, your payment actually increases by 0.7%. If you wait until age 70 to start collecting, your payment increases by a full 42%. Using that same example, if your CPP at 65 was $1,000, waiting until 70 means you will receive $1,420 every month instead. To help make this clearer, let us look at a real example. Margaret is 63 years old, and she is thinking carefully about when to start her CPP. Her calculated CPP at age 65 would be $900 per month. If she starts now at 63, she will receive about $755 per month. If she waits until 70, she will receive $1,278 per month. If Margaret lives to age 85 and starts at 63, she will receive about $200,000 total over her lifetime. If she waits until 65, she will receive about $216,000 total. If she waits until 70, she will receive about $230,000 total. That is a $30,000 difference based solely on when she decides to start collecting. However, this calculation assumes she lives to 85. If she passes away at 75, starting early would actually have been the better financial choice. This is exactly why there is no one-size-fits-all answer. You need to carefully consider your health, your family history, your other income sources, and your current financial needs. For help with your specific situation, call Service Canada at 1-800-277-9914. Try calling mid-morning on a Tuesday or Wednesday for the shortest wait times. Now let us talk about Old Age Security, or OAS. This program is completely different from CPP, and this is where many people get genuinely confused. Unlike CPP, which is based entirely on your work history and contributions, OAS is a benefit you receive simply for being a Canadian resident who has reached a certain age. You do not need to have worked a single day to receive OAS. You do not need to have paid into it at all. It is funded through general tax revenues collected from all Canadians. To qualify for OAS, you need to meet two basic requirements. You must be 65 years or older, and you must be a Canadian citizen or legal resident who has lived in Canada for at least 10 years after the age of 18. If you have lived in Canada for at least 40 years after turning 18, you will receive the full OAS benefit. If you have lived here for less than 40 years but more than 10 years, you will receive a partial benefit calculated based on exactly how many years you have been in Canada. For 2025, the maximum monthly OAS payment is $727.67 if you are between 65 and 74 years old. Here is something very important that many people do not know about. If you are 75 or older, your OAS automatically increases by 10%. That means if you are 75 or older, your maximum OAS jumps to $800.44 per month. The government recognizes that as you get older, your expenses often increase significantly, especially for healthcare, medication, and home care. So this automatic increase helps offset those rising costs. You cannot start receiving OAS before age 65, but you can delay it up to age 70, and for each month you delay after 65, your payment increases by 0.6%. If you delay for the full 5 years until age 70, your OAS will be 36% higher for the rest of your life. However, there is something critically important you need to understand about OAS, and that is the OAS clawback. If your annual income exceeds a certain threshold, you will have to pay back some or even all of your OAS. For 2025, that threshold is $90,997. For every dollar you earn above this amount, you have to repay 15 cents of your OAS back to the government. This repayment happens automatically through your tax return. If your income exceeds approximately $148,000 in 2025, your OAS is completely clawed back and you receive absolutely nothing. This is exactly why careful tax planning in retirement is so critically important. If you have control over when you withdraw from your RRSPs or when you realize capital gains, you might be able to keep your income below the clawback threshold and protect your OAS payments. Now we want to tell you about a benefit that shockingly many low-income seniors do not even know they qualify for. It is called the Guaranteed Income Supplement, or GIS. This is extra money added on top of your OAS if your income falls below certain thresholds. GIS is specifically designed to help seniors who have little or no income besides OAS. If you are single and your annual income not including OAS is less than $21,624, you could qualify for GIS. For 2025, the maximum monthly GIS for a single person is $1,075.33. That is on top of your OAS payment. Think about what that means. If you are receiving maximum OAS of $727 and maximum GIS of $1,075, that is $1,802 per month just from these two programs alone, and you did not need to have worked a single day to qualify. If you are also receiving some CPP on top of that, even a small amount, you could easily be looking at over $2,000 per month in total retirement income from government programs alone. The biggest problem is that many people who qualify for GIS simply do not apply for it. Some do not even know it exists. Others think it is too complicated. Here at Canada Pension Authority, we want to be absolutely clear about this. If you think you might qualify, you must apply right away. Service Canada does not automatically enroll you in GIS the way they do with OAS. You have to take action yourself. You can apply online through your My Service Canada account or fill out a paper application and mail it in. If you are approved, your payments will start the month after Service Canada receives your application, but you cannot get retroactive payments for months before you applied. That is why acting quickly is so important. Also remember that GIS is reviewed every single year based on your income tax return. So if your income decreases, your GIS could increase automatically. Always file your taxes every year, even if you have no income to report, because many benefits including GIS depend entirely on your tax filing. Beyond CPP, OAS, and GIS, there are additional benefits worth knowing about. The allowance is available for people aged 60 to 64 whose spouse or common law partner receives GIS, meaning you do not have to wait until 65 to get financial support. The allowance for the survivor helps people aged 60 to 64 who have been widowed and have a low income. Many provinces also offer their own additional supplements on top of federal benefits. Ontario has Gains, British Columbia has the BC Senior Supplement, and Quebec has its own program for seniors. You may also qualify for the GST credit, the disability tax credit, or be able to claim significant medical expenses on your tax return to reduce what you owe. Now, let us talk about the 7 most common and costly mistakes that we see Canadian seniors make. The first is starting CPP at 60 without carefully running the numbers. The 36% permanent reduction is devastating for most people unless you have a very specific reason, like poor health or an urgent need for immediate income. The second mistake is not understanding the OAS clawback and withdrawing large amounts from RRSPs in a single year, pushing income over the threshold unnecessarily. Spread large withdrawals over multiple years whenever possible. The third mistake is not applying for GIS when you qualify. Missing out on over $12,000 per year because you did not apply is a heartbreaking situation that we see far too often. The fourth mistake is failing to update Service Canada when your situation changes. If you move, change your marital status, or experience any change in income, inform Service Canada immediately, or you risk overpayments you will have to repay. The fifth mistake is not coordinating benefits with your spouse, especially regarding survivor benefits and pension income splitting. The sixth mistake is forgetting that CPP and OAS are taxable income and getting hit with a large unexpected tax bill. Request that taxes be deducted directly from your payments to avoid this problem entirely. The seventh and final mistake is not seeking help when you need it. The rules around these benefits can be genuinely complex, and getting personalized professional advice can easily pay for itself many times over. Here at Canada Pension Authority, we want you to take action on everything you have learned today. Log into your My Service Canada account and review your CPP statement of contributions carefully. Check for any errors in your contribution history. Calculate your estimated retirement income based on different starting ages. Determine whether you qualify for GIS or any provincial supplements. And please make sure you are filing your taxes every single year without fail. Your retirement should be a time of genuine peace, enjoyment, and complete freedom from financial worry. You have worked incredibly hard your entire life. You have paid your taxes faithfully. You have contributed to CPP year after year. You have helped build this great country. These benefits are yours, and you have absolutely earned every single dollar of them. Do not leave money on the table simply because you did not fully understand the system or because you did not ask the right questions at the right time. If you found this video helpful, please give it a thumbs up and share it with friends or family members who are approaching retirement. Subscribe to Canada Pension Authority and click the bell icon so you never miss our weekly updates on Canadian senior benefits. Leave a comment below if you have questions or if there is a specific retirement topic you would like us to cover in a future video. For direct help, call Service Canada at 1-800-277-9914. Remember, knowledge is power, especially when it comes to your money and your retirement security. Thank you so much for watching Canada Pension Authority, and take good care of yourself and your hard-earned money.